Hey there, welcome to the Catalyst Report. I'm Amy Lewis from the KFBK Morning News. Brandon Haefele, of course, CEO and president of Catalyst Mortgage. So you're buying a home, you saved and saved and saved for that down payment, you're pre-approved, you know exactly how much money you need to afford the home of your dreams, right? Or do you really? Are you willing to put all the money on the line? So let's talk about that with Brandon Haefele. So a lot of times, Brandon, people kind of make the first error thinking that they have to put all money in instead of like saving a little bit for money or things that come along the line, right?
Absolutely. You know, we talk about buying a house, and from putting a down payment that you've saved, or even getting a down payment assistance grant, or going through a down payment assistance program, people need to really focus the idea of their bills, but what other ancillary costs and other things are going to come up during the process, from utilities for the house, moving expenses, and so on. It's not just about the down payment where that cost starts or where it ends. It's actually where it starts and what cost you're going to have.
So then talk about that. Talk about how much money is appropriate for a down, and then how much money you should save to cover those additional costs that obviously are coming down the road.
Well, I think it's one of those things that depending on what program you're first going with, you have FHA that's 3.5% down, you have conventional that's 3% down, but you can always put all 5, 10, 15, 20%. But then on top of that, you have grant programs that they will, gift you the down payment, either through the state, local city. Citrus Heights has, a great program, and so on. But it's important to know that when you have those down payment programs, or you're putting that down payment, what are your estimated costs over and above? For example, you're going to be buying the house. You're going to move in. Well, you might want, you might need a new fridge, or you might need, blinds, things that have to be done to the property.
And there are things you don't know that you're going to need.
Well, and that's important, especially during the process. Exactly. It's important during the process when you get the home inspection or an appraisal done. Know what these items that need to be fixed, because a lender might not have an issue with it to lend on, but when you actually get in the home, you're going to be like, okay, hey, this is going to be a little, a cost that I have to incur. So really you want to work with your realtor, your lender, make sure if something comes up on your home inspection, you identify what it is, an approximate cost to fix it, to fix that item, and then whatever other items might need to be fixed. Because at the end of the day, small things really, small thing here, really adds up to a lot, and then you have, on top of that, what is really the surprise, utilities, garbage, water, sewer, extra costs that are above and beyond what the normal renter, really is paying for right now.
It's interesting too, because I don't want to call it the mistake, but making the miscalculation of, I'm going to put all this money down on my house. It's not a miscalculation that just first-time home buyers make. I mean, if I was going to buy my next home, I could make that mistake even though I've owned several homes over the course of our lives.
That's a great point. Really what we advise clients that when we're doing a purchase for anybody, okay, how much are you going to put down? You want to put down $10,000. What do you have in the bank after that? Maybe $2,000 or $3,000. Well, then that's going to be a little bit of an issue. Let's look at maybe a down payment assistance program that's going to be able to keep more money in your pocket for that rainy day, because things will happen no matter what. But at the same time, when you're looking at down payments, people have a common misconception. If I put an extra $5,000 down or $10,000 down, it's going to make a dramatic difference on my monthly payment.
No.
And it's not like a car loan, because this is amortized over 30 years.
Exactly.
So the payment difference is a lot smaller. So really, saving that little nest egg is important.
And it really varies too between the, if you're buying a $300,000 home, if you're buying a $700,000 home, of how much money you should put down and how much money you should hold back, right?
Yeah, absolutely. Depending on, of course, the size and the payment, you really want to make sure, in my opinion, you should have 6 months reserves. I mean, a 6-month payment cushion in the bank if you can. Now, if you're a first-time home buyer, you might not be able to have that. But when you get to the bigger size mortgages, you really want to make sure you have that bigger savings account to cover the rainy day. But going back to the other programs and the down payment assistance programs, some of those also require, hey, if we're going to give you this, down payment assistance, we might have an equity stake on your home. And so it's really important to know, some of them do have that, and some of the city programs have that, different cities, around California. So it's important that if you're going to look at those types of programs to save the money, make sure that you do the research on what really goes into that program.
Would they not tell you?
No, they probably would, but you want to. when you're going through all the paperwork, sometimes as a consumer, we get mixed up in the paperwork.
Yeah.
We get caught up in it. And what we really want to do is just say, take your time, go through it, and make sure that you understand what you're opening
Yeah.
yourself up to when you use those programs.
Or you get bowled over with all the minutia that you need to know, and kind
Exactly.
of you get lost in some of the details.
Right.
So what about some of the fixed costs that when you look at buying a home? I know you talked about mortgage payment, PMI, define PMI.
Private mortgage insurance.
Yeah.
So on certain loans, there is mortgage insurance that protects the lender for default if you don't put the full 20% down. Now that can, in some cases, on a VA loan, you don't have PMI.
Yeah.
Also on a USDA loan, you don't have PMI. But there's other programs that you will have, private mortgage insurance. But on top of that, you're going to have homeowners insurance. You're going to have, like we said earlier, garbage, water, sewer, utilities, and then other ancillary costs, homeowners association potentially.
I know, yeah.
That's when it comes up. And one thing to understand about that is, with a homeowners association, they can add additional costs on to their fee if something is being reassessed in the association. So you have to understand what maybe plans are in the future of that association. Meaning, are they
they gonna
redoing the
up your
streets
fees
or
all of a sudden
exactly? Are
for-
you going to
yeah.
move in and you're thinking it's 250, but
Yeah.
in 3 months from now they're going to be doing an update for something and they're going to have to go up to 350.
Yeah.
Just do the research on what's going to affect your bottom line. And one thing I really urge anybody that's purchasing for the first time, don't go up to your max debt to income ratio. Meaning, people, FHA for instance, can let you go up to 50% debt to income ratio, and in some cases even higher with exceptions on different programs. But it's important to understand that you're going to have all these other costs. So stay on the lower end as much as you can to where you have more cash in your pocket. Because again, you're not living to work.
Yeah.
You want to make sure that you have the balance and you also have some more money in your pocket.
Yeah, stay on the lower end. I think that's one of the key issues there. And there are a lot of things too that I think you just touched on that I think maybe you might want to roll this back and kind of go over it again, some of the things that you need to look out for. And for me, that's the best thing about the Catalyst Report. There are so many other videos that we have posted that may be answering questions that you have right now that maybe we didn't address. So roll back and look at the videos. We have 2 years worth of amazing videos, a lot of information from Brandon and Catalyst Mortgage. So, and the thing about it too is if you have more questions, that's the guy to call, Catalyst Mortgage. I mean, everybody there is a wealth of information. So 916-287-7777, or you can go to catalystmortgage.com or just check out this Catalyst Report. Thanks, guys.